So looking at the indices space, we saw a big break higher yesterday in terms of both the European and the US markets. The most interesting of these was probably the FTSE 100 because we've been stuck in a range for a month and a half, and the breakout was something we've been hotly anticipating. It finally came. We did see this breakout. This is on the daily time frame you can see here. Now, what we can see here is essentially we've been sideways largely since the beginning of March. We saw the breakout yesterday and the close above 62.37. Very bullish indicator. We've seen that follow through today with this big green candle. It's come back into 63.24, which was your next major resistance level. You can see that's the swing high from back in late December 2015. And it's past it. So you can see there's real strength behind this rally at the moment. If we look in terms of the 1 hour chart, we can see that really it's not letting up at all. We're not really getting any sort of pullback. So for someone like me, if I was to get into a trade like this, I wouldn't necessarily place a trade right now. Personally, I like to wait for pullbacks for me to get into a position. So if I wasn't in a trade already, I wouldn't necessarily be entering right now. But bear in mind that we are certainly back into a bullish mindset, and your next major resistance point, 64.47, 64.89, you know, are certainly attainable. You can see that we did see this big rally coming into this period of consolidation. Wouldn't be surprised to see us rally into that resistance zone in the near future. So short-term pullbacks are the kind of thing that I'll be looking for as an opportunity to get long, just because they give you a good opportunity to attain a better risk-reward profile. Otherwise, it's very difficult to ascertain exactly where you're going to put your stops if you're placing a trade in a market that is going pretty much in a straight line like we're seeing at the moment. This is the DAX. We can see that the DAX actually came off a lot more than we saw in terms of the FTSE 100. Excuse me. You can see here on the daily time frame, we've broken heavily higher, broken through 99.28, which is your resistance point at the back end of January. The next major target is going to be, you can see here, we've got the 200-day SMA, which is around about 101.01, and then just above that 101.21, which is the real key level, which is your peak from mid-March. Those are your two major resistance levels to watch out for at the moment. Very similar kind of thing to what we're seeing in terms of the UK market, really, and that is just a real incessant rise in terms of the DAX. You know, we've got to look out for the key major resistance levels up ahead to see some sort of potential pullback. But again, I like to see pullbacks before I get into a position. So it's very dangerous to just jump into a trade because you feel like you've missed out on this rally. Often it's the case that as soon as you jump in, that's the moment that it reverses lower and you start thinking, I could have got long at a better price. So personally, it's not for me jumping into a trade when it's as clearly defined or as far on along the line as it is. This is the Dow Jones Industrial Average. What you can see here is that we have got this clear turnaround throughout this month. You can see those lower highs, lower lows turning into higher highs and gradually higher lows, and that really set the tone for this big break higher. Now the next major resistance point is 17,845. That is your resistance point from, or your top from the 4th of April. And so that should be a real key juncture for the day to be looking at. If we take it back out to the daily time frame, we can see that that level essentially is your key resistance point, that if it gets broken, you're going to be looking back towards these previous peaks from the back end of 2015, 17,978. If I zoom back out, if we manage to clear out that, then it's not really that far from the previous highs that we saw back in around about mid-May in 2015. So it's starting to look pretty good for the Dow. The next key level really is going to be 17,845 going on to 17,978.